There are 5 new tax hikes taking effect this month of this year that you probably don't know about because they're not directly happening right there on your paycheck, income tax or sales tax. Many of you may not know this, but the Biden and Democrat Party led White House and Congress passed some legislation last year that takes effect right now. And here are the 5 points that are going to be massive increases. Get ready for everything in your life to become more expensive, because how do taxes work? They pass those increases in cost onto you, the consumer, the individual. It's always in these next 5, you'll see it's always the poorest people that are going to pay these taxes. Just get ready. Here it is. If you want to, just type in the phrase, if you want to look into more depth and read about these, because I'm just going to blow through these quickly. Just type into Google Biden tax hikes set to hit Americans on January 1st or any of that kind of stuff. Americans for Tax Reform has a really good article in depth on it. All right, so first tax hike, a natural gas tax, a $6.5 billion increase. This regressive tax on American oil and gas development will drive up the cost of household energy bills, violating President Biden's tax pledge to those making less than $400,000 per year. It is a tax on American oil and gas company development, exploration and development. Okay. 2, a crude oil tax, $12 billion increase estimated. A 16-cent per barrel tax on crude and oil imported petroleum products will be passed on to consumers in the form of higher gas prices, again violating President Biden's tax pledge. Yes, because if you remember, the very first year of Joe Biden's term, they completely cut off Keystone XL. They stopped all of American independence of shipping out oil. Sure, there was still some going out, but in the meantime of his first year, now 2 years, they have been refusing to renew drilling, exploration, and other types of leases and permits on American land. So yes, we've had to start importing massively again. And we're going to put a 16-cent per barrel tax on all oil that is now being brought in, which again, ExxonMobil is not going to pay that tax. You are going to pay that tax. Okay. Number 3, $1.2 billion coal tax, which will increase household energy bills. The tax rate on coal from subsurface mining would increase from 50 cents per ton to $1.10 per ton, while the tax rate on coal from surface mining would increase from 25 cents per ton to 55 cents per ton. You guys might be thinking, oh, big deal, nobody does coal anymore. What are you even talking about? Yeah, let's look at Peabody Energy stock here. You tell me that this doesn't look like a company that's exploding. That's not a great chart. Hang on, let me show you this. BTU. Peabody Energy is a coal energy company. They are up 144% in the last 12 months. You can see that before, in fact, let's just zoom out all the way back to when they were public in 2017. They were bottoming out before COVID, but with this new administration, the people around them, let's see, January of 2021 right here, since Joe Biden has taken place, Peabody is up 760% because the demand for coal and the destructive anti-energy policies have been forcing coal back into the conversation. Again, you're paying for that, nobody else. Okay, number 4, $74 billion stock tax, which will hit your nest egg 401ks, IRAs. Okay, now this one is, this particular tweet here is not the most clear. Basically, this is mostly a penalty on stock buybacks. Now, I'm not going to get into if they're good or bad because there's a lot of debate back and forth. Basically, Apple, okay, Apple, you've got an iPhone. Apple does a stock buyback. Let's just say for easy math, Apple has 100 shares to the public. Well, they're going to buy back 10. Now there's only 90 shares available to the public. Supply and demand would mean that when they buy those 10 shares and there's only 90 left, the supply goes down. Therefore, the share price goes up. Stock buybacks have been massively popular for the last few years. And what they're trying to do here is penalize these companies for doing stock buybacks, which people are estimating will incentivize companies to not do buybacks, therefore potentially allowing their stock price to continue dropping. However, I know for a fact a lot of the energy industry companies, they have just so much cash on hand that I was reading where even some of the biggest oil and gas companies out there are still going to do stock buybacks just because even with this tax that will be hitting them, it still makes sense for them to do it. So, all right, number 5, finally, last one. $225 billion corporate income tax hike, which will be passed on to households. Democrats imposed a 15% corporate alternative minimum tax on the financial statement income of American businesses reporting $1 billion in profits for the past 3 years. Again, don't get too in the weeds on the specifics of what exactly does that mean, minimum tax, financial statement, blah, blah, blah. There's just another tax, just another layer of complexity, another regulation to follow, another thing for the CPAs and the accountants to figure out to try to help these companies pay money, which is just going to increase the cost of them doing business, or just straight up take money out of their coffers and, again, be passed on to you. Because, you guys, that's how business works. Let's just say you're a small business owner and you sell T-shirts. If you are used to making $10 profit on your T-shirts and that's the lifestyle you're used to, and all of a sudden these 5 new things come out, and now the cost of doing business takes your profit down to, say, $8 per shirt, what are you going to do? You're going to raise the cost of your shirts so that you and your company and your business and your personal lifestyle can maintain that $10 per shirt lifestyle. It's basic, simple economics. You do economics every day. These 5, whether you love it or not, are not going to be very comfortable, and you'll see them very soon. That's all for now. Take care.